channel. Today's episode is going to be pretty interesting for you because it talks about taxation of Social Security benefits. And everybody is going to get Social Security. Unfortunately, I think that a lot of people don't realize how Social Security is taxed. And so I want to share with you a video I came across on YouTube because I'm very visual a learner. Let me just minimize myself here. And I find that one of the reasons I'm doing these Heritage Wealth Planning YouTube videos is because for people like me who are a visual learner, financial planning concepts leave a lot to be desired online. For YouTube, that is. If you go to Google, there's just a ton of stuff, blog posts and whatnot. And podcasts are okay. I listen to a lot of podcasts when I'm driving, but you can't take notes or anything. And blogs are good, but man, there's just so much stuff in there. And for a visual learner, a blog, it just takes more time. For me, if I can see and hear at the same time, it's just easier for me to grasp the concepts that the host is talking about. So, which is why I'm doing this channel, because that might be you. So I typed in, is Social Security taxable on the YouTube, on youtube.com, and I came up with some stuff here. A lot of it's kind of antiquated. This one is 6 years old from the Social Security Administration, 3 years old, 4 years old, 2 years old. So a lot of it's antiquated, and nothing inherently wrong with that. But obviously, if you go to Google and you type in some stuff, most of those blog posts are going to be within the last 6 months or something like that, because the pages that are the folks who are doing those blog posts have a lot of what's called authority, where people are linking to their websites, going to their websites all the time. YouTube, which is owned by Google, by the way, which is kind of ironic, doesn't have the same level of notoriety when it comes to financial planning advice. So I want to share with you actually this video. So I typed in Social Security taxable, clicked on the Social Security lady, and we're going to talk about it here for just a second because I think it's interesting. And I'm going to fast forward to 41st mark, and I'm going to be quiet for a second because I'd like for you to hear what she says. 1/2
of the Social Security money you collected during the year and add it to your other income. Other income includes pensions, wages, interest, dividends, and capital gains. If you're single,
did you hear that? Other income includes pensions, wages, dividends, and capital gains when it comes to determining how much you're going to pay in taxes on your Social Security benefit. There's a big omission there. She did not include tax-exempt interest, my friends. Tax-exempt interest, municipal bond interest, for instance. That is also included in determining how much of your Social Security benefits can be taxed. And I don't think a lot of people realize that. And if you just go to the IRS website, the fact they didn't mention that, it leaves a lot to be desired. Now, what happened is there's something called the provisional income that determines how much of your Social Security benefits taxed. Now, I invite you to go to socialsecurity.gov and type in provisional income. You will not see anything. There's no tax code law that says taxation on or provisional income determines how much of your Social Security benefits taxed. Is based on the 1983 bill that Ronald Reagan signed into law that subjected your first benefits of Social Security. The first benefits of Social Security were subject to taxation in 1983 under the law that Ronald Reagan signed. There is a provision in the tax code that subjected benefits subject to tax, and thus the provisional income terminology that we in the financial planning and tax planning realm use. The provision in the tax code is what subjected some of your Social Security taxes to taxation, income to taxation. Fast forward to 1993, and under Bill Clinton, he signed a new law, another provision that subjected more of your benefits to income taxation as well. And so the question is, if you're just using capital gains, dividends, interest, pensions or whatever as your income to determine your Social Security taxation, you're wrong because there's more to it than that. So let's go over to remember I was talking about authoritative websites that give a lot of people linking to it, a lot of people clicking on it. The Motley Fool is one, and I've been reading Motley Fool for 30 years, I guess now, going back to mid-1990s. And so here's how you determine what your provisional income is, because again, how you determine the taxation on your Social Security benefit is determined by what your provisional income is. You start with your gross income. which is the total amount of money you make, not including your Social Security benefit. So it's everything you make to include tax-free interest, such as interest from municipal bonds that you receive. Interest from municipal bonds, tax-exempt interest, is free from income tax, but it is still subject to your provisional tax. And then you add a half of your Social Security benefit. So you take all your income plus your tax-exempt interest plus half your benefit, and that will show you what your provisional income is, which will show you how much in taxes you owe. So let's go to my little calculator I have here that I concocted in a few months back, which I use quite a bit because it helps me quite a bit when determining what a client's tax rate is on his Social Security benefit. So let's just say you have $42,000 of Social Security benefits. We'll say you have a $25,000 pension, capital gains, interest, income, whatever. But you also have $25,000 of tax-exempt interest as well. All right. So what's going to happen is $25,000 of tax-exempt, $25,000 of all other income, pension, dividends, capital gains, interest. And then we're going to take half of your Social Security benefit to determine what is called your provisional income. In this scenario, and again, we're married, filing jointly, your provisional income is $71,000. Now, what does that determine? All it does, it says how much of this total benefit, your Social Security benefit, is subject to taxation. And $28,950 of your Social Security benefit would be subject to taxation. Okay, so provisional benefit income includes all sources of income plus half your Social Security benefit, and that will say how much of your total Social Security benefit is subject to taxation. So we scroll down a little bit here and we say, what is our adjusted gross income? Well, it's pretty simple to figure out here. We take $28,000 as our provisional income and we add it to all the other income that we have. We do not add this back to tax exempt because a tax exempt income is not included in your income tax. And this is where it gets a little bit tricky that I think a lot of people miss. In fact, I know for a fact a lot of people miss. We're just simply taking $28,950, which is how much of your Social Security is subject to taxation. We're adding it to your other income, which is your dividends, your pensions, ordinary, your capital gain, interest. And that gives us an adjusted gross income of $53,950. We take off the standard deduction and our taxable income is $29,950. Don't look at this yet. I got to fix that. But $29,950. So now I go back to my other little spreadsheet here. I put in for married filing jointly, $29,950. Hit enter, and we owe $3,200 in income taxation. Not a huge issue for sure, but it's more than you would have if you did not have the tax-exempt interest. If you didn't have that, you would have had less taxation significantly. So let's just pretend that we don't have any tax-exempt interest. Now our taxable income is only $8,700. All right, so now our taxable income is only $7,000 because our provisional income in this case consists solely of all other income plus half my benefit. So 25 plus 41 is $46,000 provisional income, which means only $7,700 is subject to taxation. By the way, I probably didn't show you how we got that subject to taxation. And here's how that works from a Social Security tax perspective. Less than $32,000 of provisional income means none of your Social Security benefits taxed. $32,000 or $44,000 of provisional income means that up to one half of your Social Security benefits taxed. More than $44,000 means that up to 85% of your Social Security benefits taxed. Now, these numbers haven't changed literally since 1983. $32,000 in 1983, it could buy a heck of a lot more than it can today. In fact, a car back then would cost, $5,000? Good luck buying a $5,000 car. That's where inflation has really eaten into disposable income, but yet the taxation on your Social Security hasn't changed. $32,000 in 1983, it's not $32,000 today in terms of purchasing power. That's why this annoys me so much, because it's a stealth tax middle and working class and lower income classes for sure, because most people have Social Security. Social Security reflects the benefit to everyone, and a lot of people's benefit, most of their income is tied up in a Social Security. But if they have other things like income, tax-free income tax, pensions, capital gains, and whatnot, it's going to now make their Social Security subject to taxes, which wasn't the intent of the 1983 rule. The 1983 rule was just to tax the wealthy. And even under Clinton, it wasn't necessary to tax the middle class. It was just to give a higher tax to the wealthy. But because they didn't subject to inflation, more and more people are being sucked into this trap. And it's annoying. All right. So again, if you had taxable income right here, where is it? Right there of $8,700, your tax bracket or your taxes are only going to be what, $870? Yeah, $870, because only 10% of that amount of money. So that $25,000 of tax-free exempt interest cost you roughly $2,500 in income tax when it comes to how much your Social Security benefit is taxed. So it's important to understand that, because again, Social Security benefits are subject to provisional income. Provisional income is subject to your tax-exempt interest on top of your other sources of income. Unfortunately, the lady from the IRS did not say that, and that's a big mistake. It's incredibly important to understand that. Okay, guys, we're gonna have tons of stuff on taxation and Social Security, because it's probably my pet peeve of all things. A lot of people go into retirement, no clue what their tax is going to be. If you're married filing jointly, which is why I put this whole spreadsheet together, and the husband dies off, now the wife is going to pay, surviving spouse, we'll just say the wife in this case, is going to pay more in taxes because she's a single taxpayer. Yeah, we'll get into all that in future videos. So just sign up below, hit subscribe, hit the subscribe button down there. Actually, it's probably on that side. Hit subscribe, give me a thumbs up, and then hit that notification bell, because I'm gonna have tons of stuff on this. And as we go forward, I'm gonna have tons more on this, because it's important for you to follow. Hey, thanks for coming to Heritage Wealth Planning YouTube channel. I hope this has been helpful. Comment below. Comment. Tell me what your thoughts are. Is this helpful at all? Because I like talking about it. And if it's helpful, I'll keep doing it. Actually, I'll keep doing it anyway, because I enjoy it. Hey, thanks, guys.